Hey everyone, welcome back to Corporate Decoder, the place where we decode the mysteries of corporate filings, and today we've got a report that is all about shedding assets. Quite literally, get ready for a deep dive into some significant property sales by Moody National REIT I2 Incorporated. We're talking millions of dollars changing hands and what that really means for the company and its investors. Before we jump in, if you enjoy getting these unfiltered insights directly from SEC filings, make sure you are subscribed. And for those who love to discuss these deep dives and share your own analyses, our Discord community link is in the description below. Alright, so Moody National REIT II Incorporated has put out a current report basically telling us about some important things that have happened recently. This filing is a bit like a real-time update for investors, letting everyone know about key events. You'll see this printed on the document. It just means this report is being filed because the company has to, following specific rules set by the US Securities and Exchange Commission. Think of it as checking a box to keep things official. Now, the earliest event they're reporting here happened on the 10th of December, 2025. This is the starting point for the news in this report. This is our main subject, Missouri Moody National REIT II Incorporated. They're a real estate investment trust, which means they own, operate, or finance income. Generating real estate, essentially they buy properties and aim to make money from them. They are incorporated in Maryland, which is a pretty common state for companies to choose for legal reasons when they set up shop. This is their commission file number. It is like a unique ID for the company with the SEC, helping them track all their filings. And this one is their Internal Revenue Service Employer Identification Number. It is basically their tax ID, making sure the government knows who they are for tax purposes. This appears to be their management or parent company name, Moody National Companies, and they're based in Houston, Texas. This part of the report, item 2.01, is where things get interesting. It is all about the company completing either buying or selling off pieces of its business or property. And in this case, it is all about dispositions, meaning they've been selling things off. The first big sale mentioned is the Spring Hill Suite Seattle Hotel. On the 10th of December, 2025, Moody National REIT II Incorporated sold this hotel property, and they got a hefty sum for it, $51 million. That is a substantial amount for a single hotel property. This tells us they are actively managing their real estate portfolio, and in this instance, they decided to cash out on this specific asset. It could be a strategic move to free up capital, reduce debt, or perhaps reinvest in other properties they believe will offer better returns. Next up, on the 11th of December 2025, just one day after the Seattle sale, they sold the Hampton Inn Philadelphia. This sale brought in $10.4 million. While a much smaller figure than the Seattle property, it is still a significant transaction. Selling 2 hotels in consecutive days suggests a deliberate strategy to divest certain assets. And the selling spree continued on the 16th of December 2025. They sold the Homewood Suites Houston. This deal added another $8.4 million to their coffers. So, in a matter of about a week and a half, Missouri Moody National REIT II Incorporated has sold 3 significant hotel properties, generating a total of over $70 million. That is a lot of money to now redeploy or use for other corporate purposes. And finally, we see the signature section. This is where the authorized person from the company signs to confirm that everything stated in the report is true and accurate to the best of their knowledge. The report is officially signed off on the 17th of December 2025, a few days after the last transaction. And the signature here is from Brett C. Moody, who is identified as the Chief Executive Officer and President. This confirms that the top leadership is aware of and endorsing the information presented in this filing. Now, let's step back and look at these sales from a broader perspective. Moody National REIT II Incorporated has clearly been on a mission to streamline its asset portfolio. Selling off these hotels for substantial sums like $51 million, $10.4 million, and $8.4 million isn't just about bookkeeping. It is about strategy. Why would a real estate investment trust sell off income? Producing properties like hotels. There are several reasons. They might be looking to reduce their debt load, which is always a smart move in real estate. They could be exiting markets they feel are no longer as profitable or are becoming too risky. Or they might see better investment opportunities elsewhere, perhaps in different types of properties or in markets with stronger growth potential. The fact that these sales happen so close together suggests a coordinated effort. It's not like a few random deals happened over a year. This was a focused period of divestment. Think about it like a homeowner selling a few properties they own to simplify their life and have more cash on hand. What are the implications for Moody National REIT II Incorporated? Well, Receiving over $70 million in cash immediately strengthens their balance sheet. This capital can be used for various purposes, paying down debt, funding new acquisitions, improving existing properties, or even returning capital to shareholders through dividends or buybacks. The market will be watching closely to see how wisely they deploy this newfound liquidity. Are there any risks? Of course. If they sell properties in a strong market and then fail to reinvest that capital effectively, they could miss out on future gains. Also, if these properties were generating good, stable income, selling them means losing that predictable revenue stream. The key is whether the alternative investments or users of the cash will generate even better returns. In broad strokes, Missouri National REIT 2 Incorporated appears to be in a phase of portfolio optimization. They are raising significant capital by selling off assets, which can be a very positive sign of strategic management if done correctly. They are essentially saying, we've identified these assets as less strategic for our future, and we're converting them into cash to pursue better opportunities or strengthen our financial position. This is a common and often successful strategy for REITs. The real test will be the next few reporting periods to see how they reinvest this capital and what kind of returns they can generate from their new strategy. It demonstrates a willingness to adapt and refine their investment focus, which is crucial in the ever-changing real estate landscape. Alright, that is our breakdown of Moody National REIT II Incorporated's latest filing. What is your take on these property sales and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.